Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. Today is another AMA episode. That is, Ask Me Anything. I love to answer your questions. If you have a question you think is going to be of broad interest, send it in. I'll answer it live on the air. Send your questions to victor@victorjm.com. That's victor@victorjm.com. This question is from Dan in Alberta, Canada. I just put an apartment under contract and am working through due diligence. I have mixed thoughts in these uncertain times. It's a 32-unit, 4-story building for $50,000 a door in a town with a heavy reliance on the oil industry. At present, the gross monthly revenues are $17,000 a month. The property was mismanaged and the vacancy rate is 45%. The rest of the market has about a 20% vacancy rate, and the rents in the building are 20% below market. In its peak days, the gross rents were $60,000 a month. What do you suggest? Wait and see? Or buy during these fearful times as the deals can be the best? Well, Dan, this is a great question. On the surface, when you look retrospectively, it looks like this property might be a deal. Purchase price is well below construction cost, and the market has delivered stronger performance at this property in the past. But that's all in the rearview mirror. We would both agree that driving a car using the rearview mirror alone for guidance is a recipe for disaster. We're about to embark upon one of the largest economic slowdowns of our lifetime. The impact of this is unknown in many respects. We don't know what the credit markets will look like in 15 days or 30 days, let alone 6 months. You mentioned that the local economy is driven by the oil industry, and the oil industry is in the middle of a price war. The community that depends on oil production for its lifeblood will very quickly experience an even greater reduction in workforce if prices remain anywhere near current levels. We've experienced a massive drop in global oil demand over the past 2 weeks, which has caused prices to drop as stronger players like Saudi Arabia aim to protect their income streams at the expense of weaker players. At a certain point, with prices near levels that we haven't seen in over 20 years, these companies are losing money. The price of oil varies widely based on the cost of transportation, and in places like Alberta, where the transportation costs are high due to the lack of pipeline infrastructure, oil prices hit a low of $7.23 yesterday. Let that number sink in for a moment. Even if the OPEC price of $27.31, we're still at extremely low levels that we haven't seen in decades. So much of the global oil industry has been financed with debt, and many companies will end up defaulting on their debt, and the stronger players hope that that will result ultimately in a drop in supply. If you don't have an influx of population into the market, it's hard to see how you're going to implement a turnaround on this property in the current environment. Making investment decisions at any time requires a measure of certainty in the market conditions. There's always a degree of risk in any market, but today we have so many risks that it's virtually impossible to quantify the impact of each one individually, let alone in combination. It's certainly above my analytic ability. The key to answering the question, how long will the economic disruption last? That is the key question. And the true answer is that nobody knows. There have been a few promising announcements that chloroquine, a 70-year-old anti-malaria drug, has been shown to be effective in treating patients with COVID-19. And if that's the case, and the clinical trials prove positive, we might be looking at a shorter period of economic disruption. Then we're going to have to manufacture it in very large quantities. That also depends on whether this drug, or perhaps another, or combination of drugs, proves effective. We know that a vaccine is at least a year away. We've also seen that Italy's healthcare system was crushed. It was overwhelmed, with less than 1% of the population having contracted the disease. We're in a period of isolating the population, recognizing that the genie is out of the bottle and it's likely going to burn its way through the population until we achieve herd immunity, which is typically around 80% penetration, or unless a vaccine is found sooner. If we extend the period of isolation, and let's say that we allow 1% of the population to catch the virus every couple of weeks, we're still looking at a period of several years before we can relax the social isolation practice. As soon as you take your foot off the brakes, it's only a matter of weeks before the healthcare system gets overwhelmed again. So we don't know how we're going to handle the current outbreak socially. We also don't know when and how, if the attempts by government to provide helicopter money to individuals, to small businesses, large businesses, in fact entire industries, are they going to be forthcoming? How many businesses will fall through the cracks? How many businesses will close temporarily? How many will close permanently? If a single person doesn't pay their mortgage, then that owner has a problem. But when millions don't pay the bank, then the bank has a problem and ultimately the government has a problem. The chances are high that this situation will precipitate a credit crisis. Government-backed loans only represent a small proportion of the overall lending activity, and if there's a crisis in the private lending market, we can expect a fall in asset prices just like we saw in 2008. But remember, the markets didn't hit bottom post-2008 until almost 4 years later. They didn't hit bottom until 2012. This particular building you're asking about might be a deal, but I personally would advise you to be patient and continue to monitor the situation. You might find it to be an even better deal in the weeks and months to come. Thank you, Dan, for an awesome question. Have an awesome rest of your day. Go make some great things happen. We'll talk to you again tomorrow.